Hey, what's up, my friend? In today's video, you'll discover how to identify and follow the trend. I'm sure you know, right? You've heard the saying, right? The trend is your friend. But it's not quite as simple as the saying the trend is your friend, right? Maybe you look at a daily time frame, the market is in an uptrend. But when you go down to the 5 minutes time frame, the market is in a downtrend. So should you be buying or selling? Right? That's the first issue. Another thing, maybe you think the market is in an uptrend and then there's a strong reversal candle, collapsing lower. So you go short, thinking that, the uptrend is over. But hey, before you know it, the market reverses and the uptrend continues and you get stopped out of your trade. So I would say these are the few common problems, right, that traders face, right? And that's what we'll tackle in today's video. How to actually identify the trend and follow the trend. Sounds good? Then let's get started. So there are a few things that I want to cover. The first thing is trend is relative. So what do I mean by trend is relative? So here's the thing, right? There's really no such thing as trend. Okay, no, this isn't some, matrix or inception, trying to confuse the heck out of you. But really, trend is relative. It all depends on the time frame that, you're looking at. For example, okay, here's an example. Let's say this one over here. You can see that euro dollar, it's in a downtrend, right? This is the daily time frame. And if you look at the 5 minutes time frame, euro dollar is in an uptrend. So can you see that there is this discrepancy over here? But the thing is that there really isn't any discrepancy over here. The thing is that trend is relative because it all boils down to the time frame that you are looking at. So the first lesson that I want to put out to you is that whenever you want to define the trend or follow the trend, you must first define the time frame that you want to trade on. If you are wanting to trade on a daily time frame, then identify the trend on the daily time frame. Ignore the trends on a 5 minute, 30 minutes, 1 hour time frame. It's irrelevant to you. Or maybe if you're a short-term trader, you trade off the 5 minutes time frame, then pay attention to the trends on the lower time frame. That is relevant to you, right? Trends like on the weekly or the monthly time frame is really none of your concern because the time frame is so far away. Okay, so first lesson is trend is relative and you want to pay attention to the trend on your trading time frame. Or maybe just, one time frame higher. That's enough. Second thing, market structure. So before we go and talk about, how to actually identify trends, right? You must understand that the market, it moves in a cycle, right? It's like, spring, autumn, summer, and winter. There is a cycle to how the weather moves. And similar for markets, right? The market also moves in a certain cycle. And if you're unaware of it, right, I want to share it with you right now. And by the way, if you're enjoying this video, hit the thumbs up button and subscribe to my YouTube channel. If you don't enjoy the video, right, just subscribe to my channel anyway because I talk about trading. So market structure, okay, so let me explain to you the 4 stages of the market. So the first stage is what we call a accumulation stage. It's where the market, right, is in a range, right, where orders are getting accumulated. And if the price breaks out of the accumulation stage is where we move on into the advancing stage, otherwise known as an uptrend. And as you know, right, a trend, it doesn't last forever. Eventually, the buyers will get exhausted, sellers will come in, and what happens? Market goes into an equilibrium. Okay, goes into an equilibrium. Buyers and sellers are now pretty much in equilibrium. Eventually, right, sellers, they took control, break down, and we move on into a downtrend. And again, the market, the price, it doesn't go down forever. Eventually, buyers would say, hey, the price is, pretty low. Come in and start buying. And then we move on into what we call the accumulation stage again. Right, this accumulation stage, which is actually this cycle over here. And the cycle of the market, it repeats again, right? So this is what we call, right, the 4 stages of the market. Now you might be thinking, hey, Rainer, why are you sharing this with me? Okay, so this is important, right? This is the matrix inception moment, right? Are you ready? The reason why I share this with you is that if you can identify potential accumulation stage, for example, this one over here, potential accumulation stage, and if the price breaks above the highs of the accumulation stage, this could possibly be the start of a new uptrend. And if that happens, right, that's where you can tell yourself, hey, this could be the start of a new uptrend and I want to be buying. Likewise, right, if you notice that this market over here comes into a potential distribution stage and the price breaks below this area of support, this could potentially be the start of a new downtrend and you want to be selling. Okay, don't worry, right? I'll share with you a few examples, right, to kind of hammer home this concept that I just shared with you. But this is market structure, and I want you to be aware, right, that the markets, they don't just move randomly. There is a ebb and flow to it. Not always 100% it moves in this such a nice theoretical example that I just shared with you, right? But generally, you can attach this framework, right, to whichever markets that you're trading. Moving on, swing points and the last line of defense. So what is this, right? So now we are talking about how to actually identify trends. So when I identify trends, right, it's very important to pay attention to the swing points. What do I mean by swing points? So a trend, it doesn't just go up in one straight line. Okay, it moves up like this, it can do a pullback like this, then it goes up, pullback, goes up, consolidate, make a mess on the charts, goes up, something like this. Okay, and swing points, right, what I'm referring to is these levels over here. The most obvious are swing lows in an uptrend. These, to me, are swing points. Are you with me? Okay, so this is what I mean by swing points, right? This is important, right, because they serve as a frame of reference to what stage the market is in. So let's say again, for example, market goes up here like this. Okay, so we identify this swing point. So if the market now comes down lower and goes up here, hey, now this level over here could be what I call the last line of defense, because if the price now were to break and close below this so-called area of support, right, break below it, now is where I can conclude that this market might potentially move into a declining stage, right, a downtrend. Okay, so this is what I call the last line of defense, right? At which point on your charts, right, where if the price breaks out of it, right, it would change the dynamic of the market. It would change the direction of the trend, or it will, confirm the direction of the trend. Okay, so I know it's quite a bit over here, right? So let me just walk you through a few examples, right, to what you've just learned so far, and it's all going to make sense. Trust me. Okay, euro dollar. So let's look at the daily time frame. So you can see over here, daily time frame, right? I would take this as my trading time frame, and I only want to identify the trend on this time frame. So where is the obvious swing points over here? So from what I'm seeing over here, this to me is an obvious swing point, swing high. This one here, and this one here. How do I define it? It's quite simple actually. The levels that stick out, the most obvious ones in your face, those are the swing points you want to refer to. As you can see, there are minor swing points on the chart, like like this one here, maybe this one here, this one here. But I don't really want to pay attention to them because they are not major swing points to me. Okay, so this needs a little bit of practice, but really, whenever you glance at the chart, right, the first points that your eyes quickly identify, those are major swing points that you wanna take note of. So again, it'll be this, and this one over here, and possibly this one here. So now, what is the trend? Well, you can see that the swing points are pointing in one direction, right? It's now making a lower highs. So the trend now, it's towards the downside. So if you are a trader and you see this chart, you're trading off the daily time frame. If you want to trade with the trend, you want to be looking for selling opportunities. So now, let me ask you, at what point, right, would you want to be a buyer? So at what point, right, is the last line of defense over here that you see on the euro dollar? Where is the last line of defense? If you ask me, right, this to me is the last line of defense over here. So if the price comes up here, and let's say it breaks out of it, right, this is where I would shift my buyers from being a seller to a buyer. I want to be a buyer right now because, again, you've seen earlier the 4 stages of the market. After a downtrend, after a declining stage, right, the market could move into a potential accumulation stage. And this looks like a potential accumulation stage, right, this whole area. If the price breaks out of resistance, I mentioned earlier, this could potentially be a start of a new uptrend. All right? So this is how you use, right, the concepts that I just shared with you earlier. Identify the major swing points and the last line of defense. And on top of it, right, you're aware of the market structure, the 4 stages of the market. So this is for euro dollar. Let's move on to another example. Gold, right? Daily time frame as well. So if you look at gold, okay, what I'm seeing right now, let me just reset the chart. Okay, so one thing to point out is that whenever you do your analysis, right, you want to have the same number of bars on your chart. If not, your analysis will go haywire. For example, like say I look at this chart at this point in time right now and do my analysis. But if you see that if I zoom out, the whole analysis will change because the landscape of the market that you're looking at, the number of bars on your chart has increased, and your swing points, your last line of defense, everything, right, will change. So my suggestion is stick to one time frame and stick to the same number of candles that you're looking at on your chart. For me, in this case, in this example, I just reset a chart and just look at this, right, for what it is. Okay. So again, for gold, I'll ask myself, right, where are the major swing points? This is the major swing points here, 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 and this one possibly over here, right? So you can see that major swing points, they're all pointing in the same direction. It's in an uptrend. So if you want to follow the trend, look to buy. So now the question is, where is the last line of defense? If you ask me, this last line of defense is somewhere about here. It's a bit special because we have this upward trend line as well, but it's pretty much this whole area over here. So if the market were to break right below this area of support and below this this trend line over here, okay, I would say that, hey, you know, now the market is in a transition, right? It has breakdown of this potential distribution stage, and the market now could possibly move on into a downtrend. And I want to be looking for selling opportunities. Okay, but if that doesn't happen, right, my bias is still to be a buyer in this existing uptrend. So this is for gold. Make sense? Okay, let's see what else I can share with you, right? A few more examples to really right? Hammer home the point. Let's have a look at this market. This is the 10-year T-note futures, right? Why not? So again, I'll just reset the chart. Again, same thing. Identify the major swing points. Major swing points are possibly this one here, here, and this whole area here. Again, generally, it's pointing higher, so the trend is up. Where is the last line of defense? Okay, so I'm just going to draw one additional level over here. Okay, so it's very simple. So as you know, now the trend is up. So I want to remain a buyer because it's in an uptrend. But this over here, right, pay attention to this. I call this the last line of defense. If the price comes down lower and break and close below it, this over here, right, could be the distribution stage. And if the market breaks and closes below this last line of defense, we could possibly move into a downtrend. And I want to be a seller. But until that happens, right, my bias is still towards the upside. Okay, are you seeing how all this makes sense right now? We look into major swing points, we look at the last line of defense, and we understand the 4 stages of the market. Okay, so let's move on into something a little bit more, one more straightforward example before we look into something more subjective. Okay, let's see, what else can I share? This one here. Okay, again, this is pretty straightforward. I just reset the chart. Identify the major swing points. I'm saying this one here, and this one here. Okay, major swing points is pointing all in the same direction. I want to be a buyer. So now I look at this and I can see that, hey, this over here might be a potential distribution stage. Where is the last line of defense? It will be over here, this level. Okay, because if the price were to break below this level, this last line of defense, this could be a start of a new downtrend, right? The start of a declining stage. And I want to be a seller. And until that happens, right, I will remain a buyer looking for buying opportunities. Okay, so this is dollar against the Norwegian kroner. And now let's look at an example, right, that's a little bit more, not so straightforward. Because when you are trading, right, the market is never as easy as 1, 2, 3. Sometimes the market could be in a transition and the charts might look messy and you are pretty much, unsure what you should do. So I'm going to share with you my thought process to what I would usually do. And, hopefully, it helps you when you're trading the live markets. Okay, so an example is the pound Canadian. If you look at this chart, if we apply the same concepts that I just shared with you, right, you can see that generally this is still in an uptrend, right? Higher lows, higher swing lows, major swing lows over here. However, if you notice, right, the price, actually came into this area of resistance over here. So yes, the market is in an uptrend, but you don't necessarily want to be a buyer at this point in time because there is just resistance coming up straight ahead. Okay, and now, so how would I, deal with this? So what I usually like to do is to let the price break the market structure before, I make a decision. So I know that this over here is a possible area of resistance. So what I'll do is that, hey, if I want to go long, I would either buy at this area over here, or I'll let the price break out first and then do a retest and look for trading opportunities here. So this way, right, I don't have any, so-called obstacles in my way, because the obstacle is already destroyed. Okay, so you can see that sometimes, the price action, right, may not be very clean. Like this one over here, you look at all the swing points, they're all quite close to each other, and the price action is very choppy. Okay, another example is the S&P 500, right? I'll look at a weekly time frame because it's easier to explain from there. If you look at the weekly time frame, again, you see that over here, right? This, to me, this level is the last line of defense over here, where the price break and close below it. So buy right when the price, breaks below that level, I'll be looking to go short. And the market did actually went down a little bit lower, but before you know it, right, it actually staged a very strong reversal back towards the upside. So you can see that this framework is not foolproof. The market does falls break out regularly, and you have to be prepared for it. But it does not mean that, hey, it's a concept that you can't use, because if the market does a false breakdown and let's say now it's back above this area of support, okay, now at this point, your bias can be shifted towards the upside again, because after all, you realize that this is a false breakdown and the trend is still intact. You want to remain a buyer. So I hope you can see that how this last line of defense, right, can help you switch between knowing when to buy and knowing when to sell. It's like, if the price is below this last line of defense, you sell. If the price goes back above it, you remain a buyer. Okay? And one more thing is that if the charts, right, don't make sense to you, or no matter how you analyze, you just do not know whether you should be a buyer or a seller, my suggestion is stay out of that markets. There's no point forcing yourself, right, to put on a trade in a market that you don't understand. So what I've just shared with you is a framework that you can use, but hey, there will be times, trust me, often, right, where the charts still don't make sense to you. And if it's not within the framework that is of your understanding, move on and trade another market, right, that makes more sense for you. Okay, so that is my advice to you. So as a recap, here's what you've learned today, right? Number one is that the trend is relative. So if you're trading off the daily time frame, pay attention to the trend on the daily time frame. All right, don't pay attention to trends, for example, on the 5 minutes or the 15 minutes time frame, because it's irrelevant to you. Number two, we talk about market structure, how it's important to at least understand, right, the ebb and flow of the market. Accumulation stage, price breaks up, move into a advancing stage. Advancing stage moves into a distribution stage, and the market breaks down of the distribution stage, moving into a declining stage. And then we spoke about swing points and last line of defense. This is how you can actually identify the trend and know at which point on the chart, right, if the price breaks down of it, right, it would switch, right, your trend bias, maybe from an uptrend to a downtrend. Okay, so the last line of defense is also another important concept, right, to understand. And finally, one last thing, right, that I didn't write over here is that if a chart don't make sense, move on, right? There's like what? I don't know, if you're trading Forex, there's easily, 20, 30 different currency pairs to trade. Don't confine yourself to a chart that you don't understand. There are plenty of trading opportunities out there. So really, don't force a trade if you don't understand the chart. Alright, so with that said, I have come towards the end of this video. If you have any questions or feedback, just let me know below and I'll do my best to help. With that said, I wish you good luck and good trading. If you enjoyed this video, hit the thumbs up button and subscribe to my YouTube channel. I'll talk to you soon.